How to do Binance Margin Trading, easy tutorial for beginners. Hey guys, welcome back to the YouTube channel. Today we'll be taking a look at how we can do Binance Margin Trading. So let's get into it. Now, trading is super essential in cryptocurrencies, especially where there is such a great amount of profit that you can make with trading. And everyone knows about crypto trading, but sometimes it can be a little difficult to understand. So we're just going to break it down in simple terms, and we're going to break down exactly what margin trading means and how you can do that. So let's get into it. Now, the first thing you need to do to get started with Binance Margin Trading is to create a Binance account. I already have a video on how to sign up on Binance, so make sure to check that out. It's very simple and easy. Just create your account with your email address, password, so on and so forth. But you do have to make sure that your account gets verified. So you do have to do identity verification, such as, a driver's license, maybe you can upload a driver's license, passport, or ID card. And once your account has been verified, then you can begin trading. So to get started with trading, simply log on to your account and you're going to click on your trade section. In your trade section, you will see the drop down for margin trading and you're just going to click on that. So a lot of people ask, what is the difference between simple spot trading versus margin trading? So simple spot trading is very easy. You buy a crypto token at this price. So I bought it at this price, and the price goes up, I sell it at this price, and then when the price goes down, I buy it again, and then when the price goes up, I sell it again. That is basic spot trading. It's very simple and easy to understand. A lot of people can easily understand that. But for some people, margin trading is a lot more complicated. Now, what margin trading basically allows you to do is that margin trading allows you to borrow money and trade that. So the thing with that is, let's say just to simplify this with an example for you guys, this is the total amount of money that I have in crypto. And what I would do is that I would take this much money of my own, plus I would get a loan, you could say. So it's kind of like taking a loan and trading with that, but it's more so that if my trade goes unsuccessful, then I have to take money out of here. So then I would have to take money out of here to repay my loan. But if my trade goes successful, then I don't need to do that. So if my trade goes successful, I get a profit. So whatever profit that I make is of my own. So if my trade goes successful, then I have all this money. So all this entire section plus the profit that I generated. And this allows you to actually bet on more than you actually have. So this is a really amazing way to trade more with a lower investment. However, this is where you also need to keep in mind of risks. So because you are taking a loan or you are, betting on someone else's money, if your trade goes incorrect, then what you actually have to do is you have to repay that loan with your own money, and that is where risk is involved. So where you take loan or borrow money or borrow cryptocurrency, we're actually going to be calling it a leverage, and the higher the leverage, the more risk. So the more money you are borrowing, the more you are at the risk of liquidation. So that is these are just some of the basic key points of margin trading. So to get started, just go onto the margin trading chart on Binance, and you can see you can select any kind of crypto token from the right side of your screen. So let's say I want to take a look at Ethereum and BUSD. So this is the chart, and on the left side of your screen, you're going to see the buying and selling prices currently, what prices people are looking to buy at, and these are the current prices people are looking to sell at. Then you have all of the market trades. Now below that, if you scroll down, you have your basic trades. So first off, you have a basic spot trade where you can choose to buy or sell Ethereum at a certain price. Then you have a cross 3x. So a cross 3x is different from a isolated 10x. Isolated margins enable you to isolate your collateral in one, while cross 3x allows you to keep your risks at a minimum. Now you can see over here, then when you click on cross 3x, you have a limit trade, a market trade, and a stop limit that you can add. And you also have normal. Normal is where you actually just, do it with your own cryptocurrency. It's spot trading. But when you click on borrow, what you can do is that you can borrow a certain amount of Ethereum and buy it. Like, you're not actually holding the cryptocurrency, you're not buying it, but you're trading with it. So when you choose to buy, you're betting on the price to go up. When you're choosing to sell, you're betting on the price to go down. So you're going to enter whatever amount of Ethereum that you want, and you will see the total, and you can margin buy Ethereum. So This is what a cross 3x trade is, and a limit order is to buy at a specific price or to like sell at a specific price depending on the price that you enter. So you can see the current price is 1279, and the limit order that I'm putting in will be lower than that. So I would go with 1269. It's 10 cents less. So this is the price that I want to buy at, margin buy at, and you can enter the amount of Ethereum that you want to buy. Then you can also choose to repay later on. So when you're repaying money, if you actually have any kind of debt in your account, you're going to be repaying that. And you can choose to repay in the buy section as well. This is just really dependent on whether you're longing or shorting. Longing a stock or a cryptocurrency means that you expect the price to go up. Shorting means you expect the price to go down. And now you also, in your cross 3x, you have this kind of leverage. So depending on what leverage you select, it's multiplied by that amount. So if I actually put in 2 Ethereum, and I leverage it to a certain amount, that means multiplied by that amount. And you can see on the top, you actually even have a transfer and borrow section where you're going to be able to borrow money into your account, and you're going to be able to borrow it either into your cross 3x or your isolated account. So depending on where you're looking to do your trades, you can borrow in that specific account. Now, if you take a look at isolated margin, it is the margin balance that you get to an individual position. So this will be the amount borrowed for that specific trade that you are going to balance, and this will be on one specific trade on their individual position instead of being all across all of your positions. So if I make multiple different price orders on the market in multiple different limiting orders for Ethereum with cross 3x, then I'm going to be leveraging my risk equally between all of my positions. So if I have, multiple different positions, so these are the multiple different positions, all the risk will be divided equally. But in a isolated margin, maybe the risk for one position is this much, maybe the risk for the next one is going to be this much, because I can manage risks on each individual positions. Now, for beginners, it is recommended to keep it at a cross 3x, because if you put a isolated margin on a spot trade or on a market limit trade, then you're actually going to be at risk for liquidation, because a singular trade going wrong will liquidate your entire account potentially. So that is something to keep in mind. Plus, leveraging risks are pretty high for any kind of crypto trade. So these are just some of the basics of getting started. Once you actually input your orders, you will be able to see them on the bottom of your screen on Binance, and you can see even an isolated 10x over here. So you have some basic information. You even have a stop limit, and if you actually click on your stop limit, you can do a OCO. You can take profits and stop losses, and make sure you input this information whenever you are looking to do margin trading for Binance or even futures trading. I recommend that you put stop limits on both of these kinds of trade whenever you are putting in your own info. So that was it for today. I hope you guys found this video helpful. Make sure to leave a like and subscribe to our YouTube channel, and I will catch you guys in the next video.